it depends what time horizon, right? Let's not worry about what happens in the first, week, 2 weeks, 3 weeks. But over time, I think of this as two different ways. Those of us who've been in this space for a long time, it's like our IPO. We were seed investors in Bitcoin or Series A investors, Series B, Series C, and then eventually we get the IPO. But like the IPOs of the 90s, I think it usually does, they do pretty well, which is we'll see a lot of follow through. So I'm expecting, the same as everybody else, the kind of $50 billion over the course of the year. But there is no insanity like crypto insanity. As you know, Ran, is when things start happening, people they lose their minds.
The recent approval of multiple spot Bitcoin ETFs caused quite a stir in the constantly changing world of digital assets. Some critics contend that the excitement may have been overstated, despite the fact that many saw this as a huge turning point for Bitcoin and the cryptocurrency sector as a whole. The Bloomberg analysts James Cart and Eric Balunis revealed last Thursday that the recently authorized ETFs had seen an astounding surge of billions of dollars in transaction activity. Signaled as an achievement, the debut broke all previous records for exchange-traded funds. However, some people are doubting the actual significance of these advancements due to the ongoing drop in Bitcoin values since its debut. We turn to Real Vision CEO and well-known macro expert Raoul Pal in the middle of this interview, as he recently offered his thoughts on what's happening. Pal spoke about the present condition of Bitcoin in a recent interview and shared his thoughts on what this implies for the cryptocurrency sector as a whole, as well as for Bitcoin. Despite the recent price changes, Raoul Pal, like other influential figures in the crypto industry, encourages patience and endurance. We explore Raoul Pal's thoughts on the recently authorized Bitcoin ETFs, their effect on the market, and his overall viewpoint on cryptocurrencies, which includes Ethereum, in this video. In light of these developments, he also offers his opinions on the general status of the US economy. Enjoy exclusive snippets from our chat with Raoul Pal to the very end. For more informative videos on the always changing cryptocurrency landscape, don't forget to like this one, subscribe to our channel, and enable notifications. Thank you for coming, and now let's get started with Raoul Pal's interview.
There is no real precedent for a 70-volt asset that's in a roaring bull market coming to be available to every single person who owns a brokerage in the United States. So anything could happen. It could be a wild-ass bubble. I don't think it's going to be a damp squid. Look, they're all correlated anyway. They always were. They were correlated by the macro business cycle, and they always have been. So they are correlated assets, but the rebellious aspect of building a new financial system, you can either take it as, well, Gary's won and we've kind of put it inside Wall Street's walls, or we put the Trojan horse inside of Wall Street. I'll go with the latter.
Do you think that now the institutions are going, okay, we've got the Bitcoin ETF, and it's time to move on to the next one, which is logically going to get an ETF, and that's going to be ETH?
It's not the institutions, it's us lot. We're the people front running it. So we're going, okay, ETH next, let's pile our money into ETH. That's what's going on, and that will go. I mean, I think last time I came on the show, I said this is the next big trade, amongst the majors, is this switch. And if I look at the chart pattern, it's this giant wedge over a period of time. In fact, we showed it on the show last time. This giant wedge pattern in the ETH Bitcoin cross on the monthly chart. Then, I use a lot of DMARC for my technical analysis. It gave daily, weekly, and very soon a monthly 9 count.
What do you think the probability is of an ETH ETF in the next 12 months?
No, I mean, even the guys from Bloomberg who've been on top of all of this have said, listen, it's probably a 60-70% chance that will happen. Makes sense to me. Again, if you've got the two biggest assets, just think of Gary's mind, right? Gary Gensler. His mind is, let's get these behind Wall Street. Let's give Wall Street a share of this. Let's get it into my jurisdiction. Then, of course, you want the second largest asset. The rest he'll probably leave to us for a while until we get a change of SEC or whatever. But he wants to make sure that they've kind of got the guardrails around the two big ones. So I think they want it.
The cryptocurrency market is presently going through rocky waters, as seen by the 12% decline in Bitcoin. Ethereum, on the other hand, has become a strength, exhibiting an amazing rise of almost similar magnitudes. The top altcoin is now trading at $2,534, up 11.55% from the previous week. The growing confidence surrounding the possible approval of an Ethereum ETF is what is propelling Ethereum's positive momentum. Insiders in the industry are wild with excitement, thinking that this approval may happen before the year is up. SEC Chair Gary Gensler, however, seems unwavering in his refusal to approve yet another spot cryptocurrency ETF. Ethereum supporters, in spite of Gensler's position, are adamant that the SEC could be forced to relent in the event that a court ruling is obtained, requiring the clearance of these kinds of goods. This followed the lead established by the Grayscale decision, which was crucial in getting authorization for Bitcoin ETFs. The judge stressed in that decision that it is inconsistent to refuse spot ETFs while futures ETFs are already available. This finding may also apply to Ethereum. BlackRock CEO Larry Fink has shown a strong interest in spot Ethereum ETFs, adding fuel to the speculative fire. This is similar to his prior excitement for Bitcoin ETFs. Now that the market is changing and the environment for regulation is changing, we focus on Raoul Pal, the CEO of Real Vision and a well-known macro expert. Raoul provides his thoughts on these market movements in an exclusive conversation, illuminating the nuances of SEC laws, the possible effects of Ethereum's increase, and the larger ramifications for the cryptocurrency environment. Let's now hear from Raoul Pal on the chances for an Ethereum ETF and the current state of the cryptocurrency industry.
So this is global liquidity from all the major central banks, the Fed, the BOJ, the PBOC, the ECB, and the Bank of England. And basically they were all withdrawing liquidity, but I noticed that liquidity had bottomed in year-on-year measures and other forms back in. It actually started bottoming in June, which got me into starting to rebuy Ethereum in the lows there, and then fully confirmed the bottom to me in my measures in October, November. So that's when I really kind of loaded up in technology and the full crypto. And for me, that these are forecastable, readable cycles based around the debt refi cycle. So for me, that's why I've got a more extended view before a downturn than Henrik has, because I don't see any reason why it won't just continue, generally speaking, till 2025, the end of this perfect cycles we've been having since 2008. So this is the Fed balance sheet in black, and the red is 36 months forward of the current interest payments. What that's telling you is the interest payments are set to explode or are exploding because of the COVID payments 36 months ago. The COVID debt. And what we found, this is the shorter term chart, using the longer term chart since they started QE, basically all QE has been monetizing past debt. So after the 4-year cycle, they just monetize the debt, shove it on the balance sheet, start again. So it's been this endless 4-year cycle based around this. And we've got this ridiculous phase to come where they can't really manage the interest payments without doing something. But you can't have rates at 5% or even 4% if you're looking at slightly longer, because the maths don't work, and they've got to keep issuing to pay all the interest of the 10 trillion or whatever they have to roll over the next year or two. So, for me, that's the liquidity cycle. And you do that and assets go up, because you're optically debasing the denominator, the currency. That's been my core thesis for this everything code cycle, is they've done the same thing every time, which is, okay, the economy slows down because rates have gone up and there's so much debt, so fine, the economy slows down a bit, and they use it. It's the same time as the election cycle as well. It's all the same cycle, Bitcoin halving cycle, it's all the same time. They get interest rates down and they engineer some way of using the balance sheet. Who the hell knows how, what reason, but that's generally what they do. And that's why election years tend to be pretty good years, which is why this is why, and I'd love to hear your view, Henrik. That's why I still struggle to get bearish for 2025, because even if the economy slows in an election year, they'll just stimulate more. And that's the struggle I have, is that, if you have a blow off top and some, I've seen some of your stuff, like you could have a 1929 style thing. I'm like, I don't think you can, because they just print money and optically it debases the currency. So how do you get that?
Raoul Pal gives us optimism as we make our way through these stormy financial waters. There is still a good possibility that we may overcome these obstacles without suffering catastrophic consequences, especially for those who live in nations with strong currencies. But Pal stresses the importance of investing, seeing it as a necessary task for people who want to increase and protect their money over time. Traditional asset classes like bonds could not grow quickly enough to offset the consequences of inflation in this dynamic environment. Although well-known market indices like the S&P can help preserve money, according to Raoul Pal, cryptocurrencies are still the best option. Only technology and cryptocurrency equities, in his opinion, have a chance to continuously outpace the rate of currency depreciation. We would want to hear your opinions about the video as we wrap up our investigation into Raoul Pal's views. Do you think that the world's enormous debt issues may be resolved by artificial intelligence and other quickly advancing technical innovations? Please share your thoughts in the comment section below. Don't forget to show your support by hitting the like button, subscribing to our channel, and turning on post notifications. Thank you for watching, and stay tuned for more videos like this.